Well, it's been a big week for financial markets, and the fun doesn't stop there because the week ahead has plenty in store for us when it comes to central bank decisions, the likes of jobs data. And of course, we've got that tariff deadline coming up on the 9th of July, where, of course, Donald Trump and many other countries will be hoping to strike trade deals ahead of that deadline. So plenty to sink our teeth into as we look ahead to the week ahead. So let's kick off first and foremost with an outlook, as we always do, of the top ticket items for the week according to Trading Economics. Notably, we don't have that deadline on Wednesday highlighted here for the reciprocal tariffs to kick in once again. But nonetheless, I will note that and we'll be able to talk around that. So Tuesday, business confidence and the RBA interest rate decision taking hold out of Australia. We've got trade data out of Germany, the IVPMI coming out of Canada, then Australia back in the sort of limelight on Wednesday, where we've got the Westpac consumer confidence change figure, the inflation rate coming out of China. And quite frankly, I could definitely have talked about China this week as well, but so much going on that we've left it off because much of the data comes out on the weekend, where we've got the likes of imports and exports coming out of China on Saturday. Nonetheless, on Wednesday, we've got the FOMC minutes, and then Friday, the GDP data out of the UK, amongst others, and the unemployment rate, which highlights the fact that we've got the jobs report coming from Canada. So let's start off with the US. Like I said, we haven't necessarily got on the economic calendar the 9th of July, but it's certainly a date that we've been talking about for some time now. And that's because the reciprocal tariffs come back into play on that date. Will they? I mean, that's the question mark, right? So Donald Trump and many of the other leaders of different nations around the world have been trying to push for trade deals ahead of this deadline. And we have seen some. We have seen the likes of the UK strike a deal with the US. We have seen now Vietnam, just in the week just gone, striking deals with the US. And many are moving in that direction. Notably, it's the kind of thing that's going to be grabbing the headlines, but it already has been grabbing the headlines in one direction or another. And we can see it here, right? So just recently, this is on the Thursday that I record this video, you can see the EU closing in on a framework that could essentially see them strike a deal that they accept the 10%, but they start to try and push back on some of the different tariffs that have been hitting them hard, in particular, those on autos that the German auto industry has been suffering as a result. So there's a possibility of them striking a deal. We've seen that trade deal with Vietnam. That saw 20% on Vietnamese exports to the US, but 40% on transshipment. And transshipped goods are essentially goods that are utilizing Vietnam as an intermediary. So if China decide to send something to the US, if they do it via Vietnam, perhaps they pay a lower rate. Now, there is a risk here that you see so-called nation washing, where you then add a part to the process in Vietnam, and then all of a sudden it's a Vietnamese product rather than the Chinese product. So that hasn't necessarily been highlighted, but it does highlight potential grounds for disagreement or the basis for future trade deals with other Asian nations in particular, and they're sort of mentioning South Korea there. You've also seen US lifting chip design software curbs against China. That is a breakthrough. Of course, the US really did feel the squeeze when it came to rare earth metals. And so they did sort of reach some agreements, but certainly not necessarily an all-encompassing agreement. So there's still plenty more to do when it comes to the US and China. And the US and Japan appear to be getting nowhere at the moment as well. So there's some agreements, there's some achievements, there's some areas where we're not necessarily seeing that. Now, notably, this is a chart that you might have seen around the place. It's the effective tariff rate according to where things are expected to be. Now, that has been shifting of late because we've actually seen some trade deals come to the fore, and therefore that current effective rate is actually lower than where it had been on May the 12th. So there is a hope that as we get closer to that 9th of July deadline, so we increasingly make progress and that effective tariff rate does continue to drop. That might not necessarily be the case, but as we can see here, this is a sort of overview of that somewhat ridiculous card that was held up by Donald Trump with the reciprocal tariffs, and you can see exactly which nations are really in the firing line. The likes of China, the European Union, Vietnam, we have seen agreement with. You've got Taiwan, Japan, India, South Korea, Thailand. There's a huge amount of nations still yet to make agreements, but there is a hope that once you strike it with one nation, then another nation might utilize that as a sort of base case to then start making their own agreements. So you can see here what countries are exporting into the US heavily. So these are imports by nation. You've got Mexico and Canada, which are both sort of tied up by their previous agreements. So they have got some agreements in place there. You've, of course, got China, Japan, Vietnam, South Korea. You can sort of tie up into that sort of agent grouping. And then you've got Europe, or sort of the European Union, with many of the nations on this list as well. So those are the sort of big ticket areas to be following over the course of the week. Now, what will this do in terms of market sentiment going forward? Certainly, if we're looking at the chart for the Dow, we can see that off the back of the latest jobs report, we're climbing up back towards record highs. So you can see the record highs for the Dow haven't necessarily been attained in the same way that as the likes of the Nasdaq and the S&P 500 have. Nonetheless, we're not that far away, and we can see here on the 4-hour chart that we're sort of climbing with this nice stepped move and creation of higher highs, higher lows. Nice and orderly, and this latest push higher provides another one of those. And so the question mark is, what will happen over the course of the coming week? Now, there is, of course, a risk that if we get to that 9th deadline and we see a sharp rise in terms of tariffs, then we see inflation expectations rise alongside it. And therefore, you see likely downside for equity markets. But it all comes down to what gets done in the meanwhile. And that's why this week is going to be particularly important, the weekend and the coming days at the beginning of this week. If Donald Trump does manage to mitigate many of these tariffs that are currently expected to surge, then you do have the potential for significant upside and some relief rallies coming into play. If we don't necessarily see any agreements coming into the fold and we see a sharp rise in tariffs, then you're likely to see downside coming into play. You also have this idea that Donald Trump always chickens out, taco as they call it, right? So if Donald Trump decides to push that 9th deadline, and he said he's not going to, but if you get closer to it and he's close to an agreement with the nation, it's likely he probably will push that deadline for that nation. So you have another possibility there, which is an extension of the deadline, which happened in the past, and that could also provide a relief rally. So for me, we've got a very clear-cut intraday uptrend at the moment that is maintained as long as we remain above 44,341. But really, you're looking at the potential for significant volatility across assets over the course of the coming few days in particular, but the course of the week, attributed to whether they do or don't find agreements on the tariff front, and also whether he does or doesn't extend any of these tariffs that are due to kick back in on the 9th, which is the Wednesday. So certainly a big week when it comes to the US, albeit not necessarily so much on the economic calendar front. Next, let's look at Australia and New Zealand. Now, we do have rate decisions coming into the fold for both nations. You can see here that I haven't actually got the forecasts for whether we're going to see a rate cut or not from the RBA, but I can show you in a sec. The RBNZ expected to continue cutting rates, and they raised rates to a higher degree than the RBA, but they've been slashing rates to a higher degree as well. So they've been a lot more active than the RBA. RBA has been a lot more patient on both sides of this move. And so let's just look at the first and foremost expectations for this meeting from the RBA. Markets putting an 86% chance, according to Refinitiv, that we'll see a cut. And when it comes to the RBNZ, it is a 80% chance of no change, according to the Icon platform. So that stands in stark contrast to expectations here, because you can see the RBNZ expected to cut according to the trading economics calendar here. So something's got to give here. Notably, what we have seen in terms of the relative yields between the Australians and New Zealand is that we've seen a bit of a pop recently in terms of Australian yields. That points towards a possibility of near-term upside. And certainly if we're looking at the chart for say, the Australian dollar, let's just jump onto that. The Australian dollar against the New Zealand dollar. Sorry, let me just get this on. Here we go. So here's that same chart, but in a live format. Let me just hide this and turn this into excuse me. I'll tell you what, it's just going to be easier to do it this way. Right. So if we look at this from the perspective of the chart itself, what you can see here is very clearly that we've come into this zone of support, right? So we've got this trend line support coming into play here on the weekly time frame. And we've got the possibility that we're bottoming out here. And like I said, we've got that sort of relative rate coming into play here. Sorry, I'm just recreating what we previously had, which is probably not necessary, but let's just put that on nonetheless so we can see exactly how you can create this yourself. So as we can see here, we've started to bottom out here in both price and yields at the moment. And certainly if we come along with a more hawkish tone from the likes of the RBA versus the RBNZ, that provides the basis for potentially further upside to come over the near term. Certainly when you're looking at the chart itself, you go back out into that weekly time frame, you've got this ascending trend line, and that forms the possibility of a bottom here. Now we've created this higher low and we're now starting to base out at the moment. So there is a good chance that we are seeing a potential bottom here before the bulls come back into play. Certainly the coming week is going to be really interesting from the perspective of how tariffs really shake out, because that impacts the perception of global economic development. And you look at the different types of products that Australia and New Zealand build, very different in nature. Certainly the Australians are more akin to the sort of industrialized side and the manufacturing side of China and the globe. And it's more a case of sort of agricultural exports, notably to China, where it comes for New Zealand. So you're looking at a different change in tone depending on how these trade talks sort of take shape over the course of the week. But nonetheless, from a pure charting perspective, this to me looks like a potential bottom. Another way of looking at it is to say, are we sort of coming into a fib retracement? We've come beyond the 76.4, but they were sort of fleeting moves. I think there's a good chance we do bottom out here. So let's look at how price action is shaping up. So we have the low, then we pop, we retrace into a higher low, we set this lower high, but then follow up with a higher low, and then rolling through that resistance level around about, here we go, 1084. So I think there's a good chance that we do base out from here. Of course, we do have two key interest rate decisions taking shape over the course of the week. But certainly it's an area to be looking out for, and a currency pair to be looking out for as a potential sort of turning point, given that long-term ascending trend line and the possibility that we've now created this higher low and are going to push onwards and upwards from here. So certainly an interesting chart to be following for a week that's going to be relatively busy on both sides. Finally, let's look at Canada. Of course, you've got question marks around how the breakdown of relations between Canada and the US impacts the Canadian economy. And that brings into light the fact that we've got the jobs report. The US jobs report has already taken place on the Thursday for the week before. And now we're seeing a week later, or just over a week later, the Canadian jobs report. Expectations that unemployment remains at 7%. The employment change figure comes in higher at 10K from 8.8K. Participation rate expected to increase. We're looking at some sort of key charts. You can see the deterioration of output within Canada highlighted by the PMI numbers here. So that has sort of tallied up with the breakdown of relations with the US. You can see the breakdown in trade between the two countries, notably more a case of a breakdown from exports into the US rather than imports from the US. So certainly the Canadians sort of feeling the pinch, so to speak, from this. And we've seen a significant rise in terms of unemployment of late. So certainly the Canadians have been suffering, but they have been taking action. The Bank of Canada cutting rates to probably a bigger degree than many, quite frankly, but they've been sort of flatlining of late, and there's an expectation that they're going to continue to do so for the time being. So is it a case that we see the jobs numbers sort of plateau a little bit, improve a little bit, and that's what the numbers are looking like, and that provides the basis of strength for the likes of the Canadian dollar? Well, ultimately the CAD, Canadian dollar has been doing well either way against the US dollar, and that's in no small part because of the weakness that we're seeing for the US dollar. This is the weekly time frame for the US dollar against the Canadian dollar. We have a long-term uptrend. But if we look at the near-term picture, we've broken through trendline support, even if you extend that down to that low there. So I think it's just prudent to follow the near-term trend, and the near-term trend is bearish in nature. We're rolling over once again. So unless we start to break out from, say, near-term, you're looking at sort of intraday patterns of this. So 133, 1366, 1375. If we start breaking through those levels and break through this near-term swing high, 13789, 13798, sorry. If we start breaking through those levels, then yeah, fair enough. We look like we could potentially start turning around, but very clear-cut downtrend at the moment. Certainly greater confidence of a wider sell-off comes with a breakthrough 134. But for the near term, I think keep an eye out for this jobs report. If we see sort of strong numbers or some plateauing after a recent rise in terms of unemployment, that could help bolster the Canadian dollar anyway. But certainly as things stand, very clear downtrend that has been playing out over the course of 2025 thus far for dollar CAD. So that's probably something that you want to follow the trend for the time being until we see otherwise. I hope that's been useful. Have a great weekend and a great week ahead. My name's Josh Mahony, Chief Market Analyst at Scope Markets. Thanks a lot.